company laws or under the Companies Act 2013 called as a company for the purpose of the Companies Act 2013. Fine. Now heading characteristics of a company. It's a basic outline. Characteristics of a company. Write one by one. First one, voluntary association. Voluntary association. Second, separate legal entity. Important concept this is. Separate legal entity. Third, limited liability. Limited liability. Fourth, separate property. Separate property. Fifth, transferability of the share. Transferability of share. Next, common seal. Common seal. SEAL. Common seal. Next, capacity to sue. Capacity to sue and sued by others. Capacity to sue and sued by others. Okay, let me explain up to here. When I'm explaining, if you feel any point is important, you go with running notes. Okay, don't wait until I give something, right? You can write your own running notes. Essential features of the company. Whenever we discuss the features of the company, compare with the partnership. Then you can get a better understanding of the concept of the company, essential features are. In this very first one is separate legal entity. Of course, voluntary association. Remember one line. Any company is voluntarily registered by promoter. This company is an artificial person. Can never it's incorporate by itself. It never asks somebody incorporate me, right? That's why company is always voluntary association and lawful purpose with an intention to make a profit or render the services the company may come into force. It may be profit company, means a trading company or non-trading company. Now guys, separate legal entity. Assume there is a one partnership XYZ and company. XYZ are partners under the name of XYZ company. They are doing the partnership. In a partnership, a partner and a partnership both are one and the same. How to create a partnership? An agreement between the two persons. Registration is not compulsory. Partnership property is the property of all partners. Partnership liability is the liability of all partners. So in case of a partnership partnership both are one and the same. It has no separate legal entity. Both are one and the same. Whereas in case of a company is an artificial person, legal person. We are all natural persons. We have the body, we have the soul. But a company is an artificial person. No body, cannot see a company. But a company is an artificial person in the eyes of the law. Until incorporation. Incorporation means registration. Until incorporation, company is dependent on the promoter. Until incorporation, company is dependent on promoter. Remember, once a company got a certificate of incorporation, company is different, members were different. So company is an artificial person, judicial person. Until incorporation, company is dependent on the promoter. Once a company got incorporated, got a certificate of incorporation, company is an artificial person, company is different, members were different. To understand this, there was one familiar case, Solomon versus Solomon Company Limited. That case summary I'm sharing with you carefully. Mr. Solomon started a company by name of Solomon Company Limited. He made an investment of the 23,000 pounds worth of shares on his name. One share is equal to 1 pound. Total 23,000 shares on his name. Later, he acquired 10,000 pounds worth of debentures in that company. His wife, daughter, and 4 sons got 1 share each in that company. Now, if you analyze carefully, Mr. Solomon, by holding the shares, is the shareholder. By acquiring the debentures, he is the secured creditor. Types of debentures are there: secured debenture, unsecured debenture, convertible, non-convertible, first, second debenture, as such. Here, secured means the debentures are having some security over the assets of a company. I repeat, Solomon started the company under the name of the Solomon Company Limited, acquired 23,000 pounds worth of shares on his. 1 share is equal to 1 pound, total 23 pounds on. His wife, daughter, 4 sons got 1 share. Now count how many are there. Solomon plus wife plus daughter plus sons. Altogether, public. But all are having only 1 share except Solomon. Under the Companies Act 2013, we have the OPC, 1 person company. Previously, there was no OPC. Earlier, OPC means only Solomon Company, example we used to refer. Because all are having only 1 share, means they got only 1 vote. But Solomon is having 23,000 votes. His vote is the final, isn't it? So that 1-man company, earlier example was Solomon. But nowadays, 1 man means only 1 person. Now definition has it. So he acquired the shares, his family members, himself, his family. Later he acquired some debentures over the company. The debentures are having some security, which means he himself is the shareholder as well as secured creditor. One hand shareholder, other hand secured creditor. Later business was sold to one boots company. Later it was wound up. The total liability. Total sales means cash sales plus credits. Total liability means secured creditor, unsecured creditor. The secured creditors 10,000 pounds, which is payable to Mr. Solomon. The remaining 7,000 pounds were unsecured creditor. This is secured, this is unsecured. What is the surplus of assets available in the company? The surplus of assets were 6,050 pounds. Under this scenario, the unsecured creditors filed a case in the court of law, praying the court that before amount payable to Solomon, pay to us. Because we are outsider. It is the Solomon's family within his family affair, himself, his family. We are outsider. Before amount payable to Solomon, you pay to us. They filed a case. Court held, pay to Solomon. Why? Before amount payable to unsecured creditor, it should be payable to secured creditor. He is claiming the money not as a shareholder. He is claiming the money as a unsecured creditor. In secured credit. So pay money to secured credit. So in case of a criteria is there, first we pay to the preferential creditors, then we pay to the secured creditor, then partly secured creditor, then unsecured creditor. There is one criteria. So this was the first case declared, and court held by virtue of incorporation he may be owner of a company, but he is not claiming the money as a shareholder. He is claiming the money as a secured creditor. Before amount payable to unsecured creditor, it should be payable to secured creditor. Though he was holding literally almost all the shares on his, and globally rule was established that company and shareholders are not one and the same. Until incorporation, company dependent on the promoter. Once a company came into force, that is certificate of incorporation company got, company is different. Prior to this case, they used to treat company and members of the company as one and the same, like a partnership. But this was the first case globally established one principle. Company is different, members. I repeat, guys. Mr. Solomon started a company under the name of Solomon Company Limited. He was acquired the 23,000 pounds worth of shares on his name. His wife, son, and four sons and a daughter got one share each, family of 5. Later, he acquired the 10,000 pounds worth of debentures. The debentures are having security over the assets of a company. By holding the shares, one hand shareholder. By holding the debentures, other hand secured creditor. Later, business was closed. The total liability was 17,000 pounds, out of which 10,000 is payable to Solomon as a secured creditor. The remaining 7,000 was unsecured creditor. Surplus of assets which are available for the creditors was 6,050 pounds. Then the unsecured creditors filed a case. Company, Solomon, both are one and the same, because himself, his wife, his children. We are outsider. Before amount payable to Solomon, you pay to us. The unsecured creditors contention was company and shareholders are one and the same. But the court held company is artificial person. Before amount payable to unsecured creditor, it should be payable to secured creditor. He is not claiming the money as a shareholder. He is claiming the money as a secured creditor. See, and in the classroom, you are a student. When you go home, you become the daughter or a son. Based on the situation, your role will change. Similarly, here also, by holding the shares, shareholder. By holding the debentures, secured creditor. And globally, rule was established that company is having a separate legal entity distinct from others. Am I clear? And one more case to support this one. Lee versus Lee's Air Farming Company Limited. Lee versus Lee's Air Farming Company Limited. In this case, Mr. Lee started a company under the name of the Lee's Air Farming Company Limited. Here, how many shares were there? Total 3,000 shares in this company. Out of the 3,000 shares, 2,999 shares on the name of Mr. Lee. Except one share, the remaining all the shares on his name. Right? And since all the shares on his name, almost all voting rights on his name, then he passed one resolution appointing himself as a chief pilot of company on certain salary. Since shares on his name, he passed one resolution appointing himself as the chief pilot of a company on certain salary. Now look at Mr. Lee. By holding the shares, shareholder. Working as a chief pilot, he is a here who is the employer? Lee's Air Farming Company Limited is employer. Mr. Lee, employee as well as shareholder. Subsequently went on a business trip. Due to plane crash, he was killed. His widow claimed the compensation. According to Workmen's Compensation Act, if employee die in the course of employment, out of course of employment, it is obligation of the employer to pay compensation. One insurance company was objected. When her husband died, who is the owner of company? Herself only, no? To whom you pay compensation? Will you pay compensation to yourself? The insurance company contention was company and shareholder both are one and the same. But the court held he was claiming the money not as a shareholder. He is claiming the money as a widow of Mr. Lee. Lee died as an employee, not as a shareholder, isn't it? When he was on a business trip, he was killed. He was working as a chief pilot that time. Company was employer, Mr. Lee was employee, and court held pay compensation. So it one more time rule was established that company is a separate legal entity distinct from members. These are forming companies. So these two are very familiar cases from the separate legal entity point, especially Solomon versus Solomon Company. And these facts, different books are giving the different facts, and these are the facts. Authoritative, I can say, right? Some figures here and there, some wrong figures you can. So first one, voluntary association. Second one is the separate legal entity distinct from persons. Third one, limited liability. Again, you remember the concept partnership, and in a partnership, partner's liability was unlimited. What is the meaning of unlimited? Joint and several. What's the meaning of joint and several? Not only capital invested, but also his private property is liable. We are all in a partnership. Today, maximum number of the partners in a partnership, 50. Maximum 50 partners. All of us in a partnership, right? Partnership, both are one and the same. Each one of us invested the 5 crores. Now we are closing the partnership. The liability itself is the say 100 crores or 1000 crores, whatever. Now, along with our investment, our private property is liable to pay because it has no separate legal entity. Joint and several. Joint and several means personally, severally liable. Whereas in case of a company, the shareholders' liability is limited liability. Shareholders' liability, my words are very clearly observant. Company's liability unlimited. Listen carefully. Company's liability unlimited. Shareholders' liability is, I'm using the word, that's why listen carefully when sessions, right? The shareholders' liability is limited liability. The concept of the limited liability is classified into two types. One as a limited by share, other one is a limited by guarantee. What is the meaning of limited by share? Write down one sentence you write. Limited by share. Limited by share means the shareholders' liability is limited to the extent of the shareholders' liability is limited to the extent of unpaid amount on the shares held by him. Limited by guarantee. The shareholders' liability is limited to the extent of amount of guarantee given over the assets of a company. amount of guarantee given over the assets of the company. To understand this, one simplest example, guys, X company limited. We have the three shareholders, say X, Y, Z. Some of you know this example, guys. Nominal value of the share is 10 rupees, 10 rupees, 10 rupees. Paid up capital is 10 rupees, 8 rupees, and 6 rupees. What is unpaid capital? Here it is the nil, here it is the 2, here it is the 4. What is the liability of the members means? We remember simplest example. Nominal value of the share is 10 rupees. Called up and paid up is, called up capital is 10 rupees. Asked them to pay 10. Mr. X paid the 10 rupees. Y paid only 8 rupees. Z paid only 6 rupees. What is unpaid value of Mr. Z? Mr. Z unpaid value is the 4. Mr. Y unpaid value is the 2. And Mr. X unpaid value is 0. No need to pay. Now what is the limited by share? The shareholder's liability is limited to the extent of unpaid amount on the shares held by him. What is unpaid value of Mr. Y? 0. Liability also. Mr. Y, unpaid value 2. How many shares were having? 10,000 shares, which means we have to pay to 10,000 mean 20,000 rupees. Mr. Y, what is unpaid value? On 4 rupees. 4 into how many shares? 1 lakh shares. 4 lakh rupees we have to pay. Outset, these two guys were lakpatis or karodupatis. You need not pay your personal amount. Just you pay unpaid balance on the shares held by. This is called limited by share. Repeatedly we come across this line in the company law. Table A, which company should follow? Any company having the shareholders liability limited by share. Table F, which company has to follow? Limited by share. Articles of Association. Table A, Memorandum of Association. Table F, G, H, I, J, Articles of Association. Table F is applicable to this. That's why meaning, if you are having a clarity in sentence, when you read very quickly, you can overcome that sentence. Okay. And now guys, guarantee, limited by guarantee. What does it mean? The shareholders liability is limited to the extent of amount of guarantee given. Let us understand here. X company limited with share capital, without share capital. With share capital, the shareholders liability limited by share when company is going concern. When company is a going concern and limited by guarantee in the event of winding up of a company. The event of winding up. This is without capital, limited by guarantee. Here itself we are covering the types of company, one point also. Two types of companies we are covering here. Notice. X company limited, the shareholders liability here limited by guarantee. What is limited by guarantee? Amount of guarantee given over the assets of a company. When I become the member of a company, I said, if any liability arises, I will pay 10,000. He said, I will pay 1 lakh. He said, I will pay 5 lakhs. He said, I will pay 10 lakhs. Company closed. What is my liability? 10,000. Because I gave a guarantee for 10. 1 lakh, 5 lakhs, and 10 lakh. Amount of guarantee given. Outset, we are all Karodupatis. We need not pay our amount. Just you pay unpaid balance in case of share, whereas shares were not there here. Without capital, this limited by guarantee. Amount of guarantee given. Other one, company limited by share and guarantee. Both are there. Share capital is there as well as guarantee. What does it mean? Here, the shareholder, Mr. X is the shareholder. He acquired 1000 shares at the rate of rupees 100. And he said, if any liability arises, I will pay rupees 10 lakhs. In this company, share capital is there as well as limited by guarantee. When you become the member, first you have to acquire the shares. What X said, I will take up 1000 shares. Each share 100 rupees, 1 lakh rupee I have to pay. Limited by share. And he said, if any liability arises, I will give 10 lakhs also. So what is his commitment? First of all, share capital he has to pay plus guaranteed amount he has to pay. That's why company with share capital. The shareholders liability into two folds. One is limited by share, other one limited by guarantee. When it is limited by share, when company is a going concern. What's the meaning of a going concern? Company is going on for indefinite period of time. Then what is the shareholders liability? Only limited by share. Unpaid balance on the shares held by him, he has to pay. That's it. Remaining guaranteed amount, he need not pay. A guaranteed amount when he has to pay in the event of winding up. Until that, he need not. So we are all members of a company. Shareholders liability limited by share as well as guarantee. Both are there here. Because one hand we are acquiring the shares, other hand we are giving the guarantee. So our liability is limited by share when if a company is going concern. And guaranteed amount he has to pay in the event of winding. You may ask a question. Sir, we are all shareholders. One hand shares are there, other hand guaranteed amount. Share amount, total amount was paid. Later shares were transferred. Shares were transferred. Who will pay this guaranteed amount? Transferee. Because I have the shares worth 1 lakh rupee plus guaranteed amount 10 lakhs. When I am transferred these shares, now onwards the transferee is liable to pay guaranteed amount. Am I making sense? So remember this point. Fine? So few lines you write. Limited by company. Right? Company with share capital. Company with share capital. Company with share capital. That point only I am giving in 2 lines. That's it. This point I am giving 2 lines. Only for clarification. Right on. Shareholder liability is limited by share. Shareholders liability is limited by share. Shareholders liability is limited by share. That is liability limited to unpaid balance, unpaid amount on the shares held by him. Unpaid amount on the shares held by him. And next para or next line, next point, bullet points wise write. In the event of winding up, the shareholder is required to pay In the event of winding up, shareholder is required to pay guaranteed amount. Shareholder is required to pay guaranteed amount. So only with the capital only these 2 points will come. When no capital is there, directly guaranteed amount. Okay, na? So this is about concept of limited liability. So guys, remember shareholders liability is limited. It may be limited by share, limited by guarantee. Today we have companies with unlimited liability. So company with unlimited liability, what does it mean? When there is no limit on the liability of members of a company, it is called unlimited company. Take a note. Unlimited company. Unlimited company. Unlimited company means when there is no limit, when there is no limit on the liability of, when there is no limit on the liability of members of a company, which means like a partnership. Like a partnership, my dear. Today law permits. Sara, how do I know this company shareholders liability is limited? This company shareholders liability is unlimited. How do I know? Check the company's name. Check the company's name. If name ends with the word limited, shareholders liability is limited. Maybe limited by share, limited by guarantee. The moment word limited is not there, shareholders liability is unlimited. Kotak Mahindra Finance. Kotak Mahindra Finance. That's all. There is no word limited, which means unlimited liability. You start as unlimited liability company. Later, whenever you want, by passing one special resolution, you can convert your unlimited liability company into limited by share, limited by guarantee. That's all. Same time, if you want to convert the limited by share into unlimited company, allowed. Procedures are there under the company law. We'll discuss the appropriate time conversion process. Right? Limited by share, limited by guarantee, unlimited liability company. 3 types of companies meaning also covered here. Later, just we remind you. Now guys, next one verify. What's the 4th one? Separate property. Separate property. Perpetual succession. Did I give that line? Can you please add that? Perpetual succession also. Perpetual succession. Perpetual succession. First I will take up this point. Perpetual succession. What is the meaning of a perpetual succession? Continuous existence. Day by day existence. Year after year existence. Perpetual succession means day by day existence, year after year existence will be there in case of a company. Whereas a partnership, it has no perpetual existence. Why there is no perpetual existence? You do remember, a partnership is the result of agreement between the 2 persons. As long as the partners are competent person, partnership is there. Once one partner become incompetent, you do remember, unless otherwise agreed, any disqualification of a partner automatically result in dissolution of the partnership. Because a partnership both are one and the same. Because it has no separate entity. That's why there is no perpetual existence. When a partner is a competent, there is a partnership. Partner is a convicted, jailed, close it. Partner become unsound, close it. Partner become LEN enemy. Close it. Because unless otherwise agreed. Right? Because both are one and the same, it has no separate entity. Whereas in case of a company is having a separate legal entity. That's why company is having a perpetual existence. Year after year existence. The company's life is neither dependent on shareholders of a company nor any managerial persons of a company. Who are the managerial persons? Board of directors. Directors may come and go, shareholders may come and go, but a company goes for indefinite period of time. Company's life is neither dependent on shareholder nor any managerial persons of a company. Until incorporation only, company is dependent on the promoter. Once incorporated, having a separate entity distinct from members. Even death of all the members of a company will not affect the company. The company's AGM is going on, annual general meeting. All the shareholders are physically present. All the directors were physically present. Everybody who got a direct or indirect contact with the company are physically present. Due to one bomb blast, all died. Is there any death to company? Here who died? Shareholder died, auditor died, secretary died, MD died, PMD died, executive directors died, banker died, underwriter died, but not a company. Company has no natural death because artificial person. Unless you bring a natural death to company, there is no natural death to company. That's why company is having a perpetual existence. It goes for indefinite period of time. Infosys is having a perpetual existence. Narayana Murthy may be there, may not be there, but organization goes for indefinite period of time. Our ICAI is having a perpetual existence. Presidents are coming and going, members are coming and going, students are coming and becoming CS and our CMAs are going off. But organization goes for indefinite period of time. Bhagirath prayed goddess Ganga. Humanity was dying without water. You come and bless the humanity. That time onwards, you can see the water in the holy river Ganga. Can you say that so and so date, so and so place, so and so time, there is no water in the holy river Ganga? Ganga is having a perpetual existence. Ganga had seen the several generations. As a Hindu, before I die, I want to go to holy river Ganga, take one holy dip. My custom says. In case if I am unable to go, some people who are going there, I will request them, bring some water. We believe in certain things. But Ganga had seen several generations, man. Organizations also sing. Once a company got registered, it got a perpetual existence. India is having a perpetual existence. Not a company, but separate entity, identity is there for India. Fine. Have you got this point? Separate entity concept. Now see the next one, separate property. Now easy. Separate property. Land purchased and registered on whose name? Company's name. Bank account is opened on whose name? Company's name. Investments were made. Company's name. Loan borrowed. Company's name. Advances were given. Company's name. We prepare the profit and loss account, balance sheet of company. Not board of director. Not CMD. Right? Thereby, the property belonging to organization, separate property. Whereas in a partnership property is the property of all partners. Each partner is a joint owner of the partnership property. Remember? Each partner is a joint owner. But whereas in this case, no, because we have a separate entity, separate property. The property belonging to company. Can you see a company? No. You can't see a company, but I can see TCS, Infosys, Wipro. I can see Wipro building, not a company. Wipro furniture I can see. Infosys vehicle I can see, but not Infosys. Artificial person, separate property, can acquire property on its name. Fine. Another one is transferability of the share. Guys, remember, X, Y, Z are partners in a partnership under this name. They are doing one partnership business. Right? X would like to transfer his share to A. Before he transfer, he should have taken permission from B and C in Y and Z. Otherwise, he can't transfer. I think you remember, transfer of the share is nothing but a admission of a partner. Admission of a partner, retirement of a partner, all partners must agree. Otherwise, you can't do that. Expulsion of a partner, majority. So, in this case, also in case of a partnership, transferability of the share is restricted. Whereas the company, shares are freely transferable from one person to another person just by delivery and endorsement. Two words I am using here. Shares are freely transferable from one person to another person just by delivery. When share is fully paid up, converted into stock, you will get a share warrant. Share warrants are transferable just by delivery. Registration with the company, not necessary. That's why just by delivery. When shares are not converted into stock, ordinary shares are there. If you want to transfer the share, registration with the company necessary. That's why delivery and endorsement. Endorsement, how do we say? We write on a page na, pay to Mr. X, transfer to Mr. X, endorse. Here also. So we are all shareholders of a RIL, Reliance Industries Limited. I would like to sell my shares. Before I transfer the share, should I take a permission from anyone here? So shares are freely transferable. There is one saying, no shareholder of a company is permanently wedded with a company. Once married, you are into wedlock. Once you become the member of a company, are you marrying the company? When a company is performing well, you can continue as a shareholder. The moment you feel that company is not doing well, you can dispose of your shares at any point of time according to MOA, AOA. Guidelines are there, follow, and the shares are transferable just by delivery and endorse. So, in case of a company, shares are freely transferable from one person to another. Am I clear? And next one is common seal. What is the common seal? Tell me anyone, guys. Excellent. A company is an artificial person. Nobody, no artificial person. In case of a company, there is a diverse between ownership and management. Ownership lies in the hands of members of a company. Management lies in the hands of board of director. Once the directors are appointed, we hand over the MOA, AOA. Within that framework, entered into contract. Any agreement, any contract on behalf of the company are signed by board of directors. That agreement must be properly affixed with the common seal of a company. With the common seal, board of directors are signed. With the common seal, agreement was signed by board of director, who is liable to pay company. Thus, on behalf of company, directors have signed. Without a common seal, directors are signed. Who is liable? Undersigned is liable, but not a company. What is the common seal of the government of India? 4 lions. Common seal of government of India, right? Nirmala Sitharaman, our finance minister, borrowed a loan of the 10,000 crores from the World Bank. With the common seal, they had signed. should repay? Government of India. Because she is representing Government of India. Without common seal, Nirmala Sitharaman signed by mistake. Who is liable? He is personally liable. So common seal is binding between the company versus. According to Companies Amendment Act 2015. According to Companies Amendment Act 2015. 2015 it was amended. They said the common seal of a company is not compulsory. It is optional. Have the common seal, put it, your wish. If you don't have the common seal, leave it, no issue. Then who should sign? No common seal, then who should sign? 2 directors have to sign, or 1 director and a company secretary. If you want to become director of a company, what are the requirements? Every director must have DIN, Director's Identification Number, and DSC, Digital Signature Certificate, e-signature. If you want to become a director, these 2 are mandatory. One is the DIN, Digital Signature Certificate is mandatory. Otherwise, you can't be appointed. Otherwise, you appoint according to Spicy Plus. You can apply. 2 members will get a, in case of a DIN also. By default, DIN will be given according to INC 30-33 permits. So what I am trying to say here, directors are having digital signature. I don't know how many of you have a, just one line I will say. Ordinary pen, if you sign, forgery is easy. Whereas if a digital pen, if I sign as a Srinivasa Rao, SRINIBA, each letter back of it, one numerical number will generate. Signature may be forged, but number you don't know what number will reflect back of my digital signature. Public key, private key. In a digital pen, public key, private key, 2 keys will. And it is very difficult. And that's why tampering is easily identified with that. That's why forensic audit today plays very significant role. The digital pen was misused, easily can be tampered. Ordinary pen means we can't. And the forensic lab, we have to wait. Procedure is there. But whereas in this case, each letter follows one numerical number back of it. Yeah, I think all of you know OTP will come. Different combinations will. Any number of times apply, different number will. Isn't it? Also, so copying is very difficult. Tampering is, and forgery is too difficult. I'm not saying impossible. Hello. That's why you have to see, listen the words. I'm not using the word impossible. I'm using the word very difficult. There only I stopped. There also possibility is there, but people won't. Anyway, right? Common seal is not compulsory today. What is the common seal of your course? CA? CA common seal? Eagle. Common seal of CMA? That sentence is there. One sentence. In Sanskrit or Hindi? My God. Common seal of Telangana? Not there. Kakatiya Arch? Okay. Kakatiya Arch. That's all. Charminar or Charminars? Charminar or Charminars? Use that language carefully. Okay, next, continue. Four words are there. 2 points I got. Another 2 more. Another 2 more. Common seal of Government of India also there. And lastly, 3 languages. English, Urdu, Telugu. Next time notice. Common seal of Tamil Nadu. Temple. Wow, super yaar. First time I got answer. Temple city na? Arch is then a temple arch. Gopuram arch will come, na? That is the common seal. Super. Karnataka? Hey, it's not a GK question, man. Continue. Hey, cool. You learn, amma. Nowadays, easy na. Learning is easier. Without moving anywhere, you can learn it, you know. Just like that, you can get an answer. Earlier, you have to ask many people, refer the many books, isn't it? Only thing is, you must have zeal to learn something. That's anyway, cool. Common seal. Not compulsory. It's left to company's policy. Otherwise, who should sign? Remember, please. Director. Out of two, one shall be managing director or director and company secretary. And lastly, capacity to sue. Breach of agreement, breach of trust. Company can sue as well as can be sued by others. Credit sales to A. Customer is not making the payment. Company can sue. Means the company will give legal notice to customer on the company's name, not on a sales manager or a director sales or a COO, CFO, nobody, company. Same time, credit purchases from P. Company failed to pay. He give notice to company. That's why company can sue, can be sued by others. Right? Verify now all the rules are clear. If you want any point to be elaborated, ask me. Basic introduction this is. Now I have two questions. First question. Can a company claim nationality? Yes or no? Nationality. Yes, raise your hand. Only 2, 3, 4, 5. Slowly hands are getting raised. Excellent. We are Indians. Similarly, company incorporated in India, Indian company. Company can claim nationality. Excellent. Second, can a company claim citizenship? Being a citizen of India, I have a nationality. I can claim citizenship. As per the Indian Citizenship Act 1950, I can claim the citizenship. Now my point is, can a company claim citizenship? Why no? Go with argument. No. Excellent. Artificial person. Isn't it? We can show many things. We can show the anger. We can smile. We can laugh. We can slap. We can shake hand. We can cry. We can do many things. Ask the company to do something. That's why company may get a nationality, but no citizenship. Final question, guys. Who is the owner of a company? Super. Company itself. I told na. Land purchased and registered on whose name? Company. Who is the owner of a company? Company. Sir, what about shareholder? Beneficial owners of a company. Please remember. Shareholders are called beneficial owners of a company because company cannot take its own benefit. Artificial person. Who is the owner of a company? Company itself. Technically we are addressing, but outside when you speak in this language, people won't understand. They say, who is teaching law for you? People say. Because they won't understand. They raise it in different style. Who is the owner means shareholder only. They know only that. You think logically here. Somewhere we have to apply your common sense. We prepare the balance sheet of company, P&L account of company, cash flow statements of company, not a shareholder. Who is the owner? Who owns the property? Company. PPE belonging to company, but not to any shareholder. Na? Thereby say who is the owner of a company? Company itself. What about shareholders? Remember, they are beneficial owners of a company. Am I clear? Okay, this is basic introduction to company, guys. 2 points I would like to share before I go to types of company. Okay, then in case of a company, we use one language and always. One is the subscriber. These words we come across. Subscribers. Then we have a member. Then we have a contributory. Today classify member contributor. When you are called a subscriber, when you become the member, when you become the contributor. Right? Before incorporation of a company. Before incorporation of company. No company. Memorandum of Association, Articles of Association is drafted. It has to be signed by one person in case of a OPC, two persons in case of a private company, seven persons in case of a public company. No company. In anticipation that company will come into force, these people are subscribed the Memorandum of Association. Means signed, stated how much money invested. Subscriber, right? Before incorporation of a company. Once a company got incorporated, after incorporation of a company, the subscribers will become members of a company. After incorporation, they were called members. Company prepare the register of members. There, your subscribers' name will be entered. After incorporation, subscribers will become members of a company, right? Once winding up of a company has started, we are closing the company, winding up. The members will become contributors. If there is any unpaid balance on the shares held by me, I have to pay to company. Amount of guarantee given, guaranteed amount I have to pay. Then I become contributory. I repeat, before incorporation of a company, subscriber. After incorporation, member. Once winding up of a company, process has started, the members will become contributories. All three languages, different places we have to use. At the time of incorporation, I would say subscriber. After the memorandum articles of association completed, I started using the word member of a company. If we start winding up of a company, when I say it is the contributory, all are one and the same, but we have to take the right word at a right situation. Am I clear? Right? And one number, always remember like this. OPC, private company, public company. How many minimum number of members? Minimum members. Maximum members. Tell me here. OPC 1 minimum, private company 2, public company 7. Maximum OPC, private company. I don't know, I am asking you. How many? 200. T or 200 or 20? 20. 10, 20. 10 or 20 or 50 or 200 or 1000 or 5000 or 1 lakh or 2 lakhs, or you can say any language. But 200, okay? Public company, unlimited. Super, yeah. Next, minimum directors, 1, 2, 3. Maximum directors, 15, or OPC also. OPC, 15 is there for all, and maximum directors for 15 over all, right? So like this, one table is there with you, maybe handy, necessary, easily you can recollect the things. That's a be nothing much, only reference sake. Whenever you have a doubt, you can turn the paper and see. Minimum number, OPC 1, private company 2, public company 7. Minimum shareholders. Maximum number of members 1, 200, and unlimited. There is no limit on the number of the members in case of a public company. Minimum directors in case of OPC 1, private company 2, public company 3. Here only students will write as a 7. That's why deliberately examiner also will ask a minimum number of directors in a public company dash. Students will think like this. Okay, once you started thinking, gone. And surely you have to write your answer. Maximum number of directors according to Companies Act, for all the cases 15. Sir, I would like to appoint more than 15 directors. Just pass one special resolution at annual general meeting, you can increase your number. No issue. Earlier, central government permission, now it is only shareholders' consent. Yesterday I told you, whenever you are passing the special resolution, explanatory statement is necessary. What is explanatory statement? Explaining reasons for appointing more than 15. State one reason. A detailed note we have to prepare and appoint people. Fine. Now guys. Shall I? Over. Now in the types of a company, first one I am going with OPC. One person company. Let me explain first and listen carefully. I will show the notes. Otherwise, you write our running notes. OPC, one person company. The concept of the OPC came into force according to Companies Act 2013. Previously, we don't have the OPC concept in India. This came into force according to recommendations given by J.J. Irani Committee recommendations. J.J. Irani Committee. The committee recommended in India also can have the OPC. According to his recommendation only, the concept was introduced to Companies Act. Fine. If you want to start OPC, how many people required? Only one person is required. One person. This person is a natural person, competent person, person resident in India. Person resident in India means any person who stayed in India for 120 days in the previous year. Which means an artificial person cannot start OPC. An alien cannot start OPC. So, OPC can be started by natural person, competent person, of course, he must be major, he must be sound mind, he must not be disqualified by any other law, and he must be a person resident in India. And other one is, who is the person resident in India? Income tax rules were different. 182 days we have to stay, whereas here 120 days. Remember the new change. Earlier 182 for OPC purpose, now it was reduced to 120 days. Fine. Artificial person cannot start. And the second point, do remember, a OPC is basically private company. OPC can never be public. OPC is basically private company. Fine. Third one, OPC cannot be registered under section 8. OPC cannot be registered under section 8. What is section 8 company? Non-profit company, license company, non-profit company or license company, service motive company, which means OPC is a private company meant for only profit. No element of, you cannot register under section 8. Or existing OPC cannot be converted into section 8 company. Which means yours is a private company, you can remain as a private. You can't convert into section 8 company also. So it can't be registered, it can't be converted into section 8. Fine. And in case of OPC, nomination is compulsory. If I want to start OPC, what is the requirement, you know? Remember guys, INC 1, INC 3, INC 4. INC 1, incorporation of OPC. INC 3, nomination. What is INC? Incorporation. E-form. Everything is online. If you want to incorporate a company, just go to MCA website. www.mca.ministryoфcorporateaffairs.gov.in. Paperless incorporation. You need not submit a single paper to ROC. Everything is online. If we have the proper internet facility, documents are ready with you, and a span of you are traveling from India to US, by the time you landed there, your company would have created. Very easy, and everything is easy. Patafat you can create your company, right? And INC3 nomination compulsory. Why nomination, sir? Only one shareholder. If anything happens to him, that's why X started the OPC. He wants to appoint Y as a nominee. But before you refer Y as a nominee, take his consent. Without his consent, you can't take his name as a nominee. Consent has to be obtained. And what is INC4? INC4 is alteration, change of the nomination. I want to change the nominee. You can change, submit INC4 within the 15 days. From the date of the change, within the 15 days, you can communicate. Death of the nominee, fresh nomination can be filed. Right? For example, X started the OPC, appointed Y as a nominee. X is having OPC, Y as a nominee, right? Later, X died. Then who is the OPC owner? Mr. Y. Now, from the date of the death of the X, Y become the owner of the company. Now, Y has to make a nomination within the 15 days. Because you become the shareholder of a company, now nominee compulsory. From the date of the you become the shareholder, within 15 days you have to refer Mr. Z as a nominee, or someone, whatever. Example 6, Z as a nominee, 10 days time. Am I clear? Right. And other one is, so nomination is must and should, consent has to be obtained. And important point, remember guys, OPC cannot be started. OPC cannot be started to do banking activities, investment activities, non-banking financial services. OPC cannot do banking activity, non-banking financial services, plus investment activity. You can make only buying and selling of the goods. OPC can be there as a private company to buy and sell the goods, but not for these purposes. Your company cannot be incorporated. And sixth one, what about minor? Remember, can minor start OPC? Can minor be nominee? Can minor have any insurable interest over the OPC? Very question. Can minor start OPC? Answer is no. Second, can minor become the nominee? Answer is no. Please remember. Third, can minor have insurable interest over the company as a beneficiary? Minor is totally out of OPC. Remember. That's why in the very first concept I told you, he must be a competent person. Minor is totally out of the OPC circle. At least minor can be a partner in a partnership for the benefits. But OPC, no. Totally out of. Minor cannot start OPC. Minor cannot be nominee. Minor cannot have any beneficial interest over the OPC. Sir, how do I know this is OPC? In the company's name ends with OPC. It may be abbreviation, it may be full form. We have to use the word private company, we are using the word private. Similarly, OPC must and should use the word OPC. Sir, can I convert OPC into private company or public company? Yes. You can convert your OPC into either private company or public company, but not Section 8 company. This is about OPC. Am I clear? And then, what is private company? Section 2, subsection 68. What is a private company? Because it is repeated, OPC was asked a number of times in examination. OPC, private company, government company, holding company, plus associate company, small company, one or other definition is going to ask from examination point of view. All types of companies one has to learn, right? Private company. Please write few lines, then I will elaborate. Private company, any company which is incorporated under the Companies Act 2013, which is incorporated under the Companies Act 2013 or under any previous company law having minimum paid up capital as may be prescribed and which restrict now write one by one. Point A, which restrict, now we write one by one. Point A, maximum number of members to 200, which restrict maximum number of members to 200, maximum number of members to 200, within the brackets, excluding present and past employees, present and past, past employees, excluding present and past employees. Second, restrict the transferability of the share, Third, prohibits issue of prospectus, minimum directors 2, yeah, up to here. When I am explaining, if you want, you can continue with your running notes. Okay, what is the private company? If I want to start a private company, minimum 2 persons are required. 1 person OPC, 2 persons are private company. Minimum number of shareholders are 2. What is the maximum? Maximum was restricted to 200. While counting this 200, excluding, see that language, excluding present and past employees, under the employees stock option, ESOPs. In our private company, all the employees are shareholder. Ours is a private company. How many employees are there? 500 employees are there. All 500 employees are shareholder. While counting the 200, present employee who is the shareholder is to be excluded. Present employees are not to be counted, though they are shareholder. Second one, past employee. Past employee means worked for some time, later resigned and went off, but still continuing as a shareholder. We are all working for a private company. Under ESOPs, all of us got the shares. We are all shareholder. Later, after 5 years, I have resigned and left the company, but still continuing as a shareholder. Myself is called past employee. You are called as a present employee. While counting the 200, excluding present and past employees. Remember these clarifications. CA students, important application based questions are there on this. You have to be very carefully remember each and every minute point also matters for you. So excluding present and past employee. Second one, joint shareholders are treated as one shareholder. I applied to company for shares. I get a share certificate because one person. If A, B, C, three persons applied to company for shares. On application, how many names are there? 3. A, B, C. Their details were given. Shares were allotted. Company gave the share certificate. How many names are there? 3 names. Joint certificate. For the purpose of counting the 200, these joint shareholders are treated as one shareholder. Remember here itself, in case of a joint shareholder, to whom company has to communicate? All 3? No. Whose name appears first? Whose name appears first? For him or her, company will communicate. For 3 persons, company won't communicate. Okay, na? Now guys, how many maximum number of the people can apply for a joint shareholder? Any guess? How many maximum people? 3, I told already. Is there any other number? 4, 5, 10, 50, 100, 1000, 10,000, 1 lakh, 1 crore, something as such? Any wild guess? Why 5? Pandavas are 5. Or we have 5 fingers. Okay. Any guess? Okay. Maximum according to recent law. Companies Act 2013 said 4 people maximum can apply. Earlier there was no clarification on this one. This was said 4 only max. Beyond 4 cannot apply to company for share. Fine. Anyway, joint shareholders are treated as single shareholder while counting the 200. Okay, so third one is restricted transferability of share. We are using the word restricted. Generally, private company means we say no transferability. Usually wrong notion. There is the transferability, but among the 200. According to AOA, Board of Directors, consent and all. Right? Restricted transferability. Like a partnership shares, they are transferable, but restricted transferability. And other one is, fourth one, prohibited the issue of the prospectus. See the language and there? Prohibited. Restricted area, with permission, I can go there. Prohibited area, no permission will be granted. Prohibited, which means a private company cannot issue prospectus to public, inviting the public to participate in company's share capital. Private company can never issue prospectus to public. Of course, private placements were allowed, section 42. Private placements are there, section 42, it is allowed. But public issue, no. Yours is a private company, arrange your money. Or private placement, not from public. You can't directly issue prospectus, ask them to invest in your company. Prohibited, right? And minimum number of directors already we know, that is 2. And the last one, must have minimum prescribed share capital. Earlier, private company means 1 lakh, public company means 5 lakh capital was there. They removed that. Because private company 1 lakh. Okay, 1 lakh is there. Operations are entire country. You aim to do your business entire country. How is that 1 lakh is sufficient? It is meaningless. That's why they say remove this concept. We ask at the time of incorporation, your operations are confined to entire Hyderabad only. Limited capital. My operations are entire south, some capital. My operations are entire India, huge capital. So based on operations, ROC will decide how much capital your company should possess. That's why minimum prescribed capital. Who will prescribe? ROC. At the time of incorporation, based on your operations, he will inform. Right? So this is about private company. Sir, how do I know this is a private company? Check the name. Check the name. The word private is there. Private company. The word private is not there. public company. Simple logic that is. You say remaining tomorrow's class.